Have you ever heard a piece of financial advice and just thought to yourself, who is that actually for? Because it sure doesn't feel like it's for most of us. Well, today we're going to cut right through all that noise. Forget the gurus making 300 grand a year. This is a real, practical blueprint for building actual wealth when you're on an entry-level salary.
You've heard this one, right? It's like the first rule in the book. Just, tuck away a fifth of your entire income. Sounds simple enough on paper. And then there's this little gem. They tell you to just go ahead and put, $22,000, $23,000 a year into your retirement account on a $50,000 salary. That's almost half of what you make. Yeah, no problem. Oh, and of course, before you even think about investing a single dollar, you need to have 6 full months of living expenses just sitting there in cash. For a lot of people, that might as well be $1 million. It feels completely out of reach.
So this is the real question, isn't it? What happens when all that advice collides with the reality of student loans, rent that just keeps going up, and a starting salary? That is exactly what we are going to break down right now. Okay, so let's get real. I mean, really real. Let's forget the cliches and just look at the cold, hard math for someone making around $50,000 a year. If you're making $50K after taxes and everything, you're probably taking home something like $3,166 a month. And that money has places to go. Rent can easily gobble up $1,350. Then you've got student loans, maybe a car payment, food. I mean, you can see how fast that paycheck just evaporates before you've even had a chance to, have a life. So after all those essential bills are paid, you're looking at maybe $316 left over. $300. And from this, you're supposed to invest 20% and build that giant emergency fund? It feels absolutely impossible. But here's the thing. It's not. You just need a completely different strategy. All right, so let's just agree to forget everything you've been told. Let's throw it out the window and start with what's actually possible. We're going to talk about the incredible and seriously underestimated power of just $100. Now, check this out. This is where it starts to get really exciting. If you invest just $100 a month, every month, for 30 years, assuming a pretty average stock market return, it turns into $226,000. You put in $36,000 over time, and it becomes almost $250,000. That is anything but small. And this is where your entry-level salary is actually a secret weapon. Right now, you are probably in the lowest tax bracket you will ever be in for the rest of your life. A Roth IRA lets you pay the taxes on your money now while your rate is super low. And then it gets to grow and be pulled out in retirement 100% tax-free, forever. It is truly a golden opportunity you only get when you're starting out. Okay, so that's the why. You get it. Now let's talk about the how. This isn't going to be complicated. This is your exact 3-step blueprint that you can literally start today. The key here is to keep it dead simple. First things first, if your job offers a 401k match, you contribute just enough to get that full match. It's 100% return on your money instantly. It's free money. You have to take it. Step 2, open that Roth IRA we just talked about. And step 3, in that account, you just buy one simple total market index fund. That's it. You're done. And look, to make it even easier, here are 3 awesome choices from the biggest names out there: Fidelity, Vanguard, Schwab. FCRX, VTI, SWTSX, honestly, they all do pretty much the same thing. They let you own a tiny little piece of the entire US stock market. You don't have to worry about picking stocks, you just own everything. Set up an automatic $100 investment, and you are officially an investor. So starting with that $100 is what gets you in the game. But what you do with your future raises and promotions, that's the secret weapon, that's the accelerator. This is how normal salaries build truly extraordinary wealth over time. And here's the rule. It's so simple. It's called the 50-50 rule. Every single time you get a raise, you split that new money right down the middle. Half of it goes to upgrading your lifestyle right now. You absolutely deserve it. Go on a nicer vacation, move to a better apartment. The other half, it goes straight into your investments. Your future self is going to thank you. And just look at how this plays out in the real world. You start at $100 a month. A couple years go by, you get a promotion. Now you're investing over $500 a month. By year 5, you could easily be investing over $850 a month, all without ever feeling like you're depriving yourself. You're just making sure your wealth grows right alongside your lifestyle. Now, I really want to reframe how you're thinking about your situation. You might not have a ton of money to invest right now, but you have something that is so much more valuable. You have a superpower that even people making 6 figures would kill to have more of.
And this chart right here is the proof. This is your superpower in action. A 25-year-old investing just $200 a month will end up with more money at retirement than a 35-year-old who invests double that amount, $400 a month. How is that possible? It's the insane magic of compound interest. Your money simply has more time to grow and make more money for you. Time is literally more important than the amount of money.
And there are other hidden advantages too. Think about it. Right now, you get to learn what investing feels like when the stakes are low. Making a mistake with $100 teaches you the exact same emotional lesson as making one with $10,000, but it's a whole lot cheaper. Plus, your potential for growth is massive, and like we said, you get to lock in those low tax rates for life with a Roth IRA.
So here's the bottom line. Building wealth on a normal salary isn't about saving every penny and never having fun. It's about starting small, being consistent, and having a smart plan for your raises. It's about understanding this is a long game, won over decades, not days. You see, the saying isn't you invest because you're rich, it's you invest to get rich. So the only real question left is, what's stopping you?